Okay, good afternoon. So under branch banking operation, um, so we are going to discuss today as well as on next Saturday. Uh, Once what are the areas we are going to cover under this section? So first we need to understand the the present your bank position as well as uh, to get an understanding about your bank present position as well as the what you need to do to improve your business, right? And so we want to expand or recreate your market boundaries. So how can you do that? So by getting knowledge about the banking industry and your bank and your working environment. And also we are going to discuss, there are a lot of discussion is going on these days whether we need branches anymore, or we go for branchless banking, or we need physical branches. So we are going to discuss the importance of branches during this session. So by end of today, so you will be able to understand how to expand your thinking on strategy beyond your competing head-to-head red ocean competition. So what do you mean by red ocean competition? Now the red ocean competition mean we are compete with our competitors and try to get a business from the market. And we have another strategy, what you call blue ocean strategy. So that is, we are not competing with each other. We are going to look at a different environment. We don't want to compete with each other. We are going to go for new environment. So that is blue ocean strategy. So Apple and how Apple into the market basically applying this blue ocean strategy. So what we try to do by completing this session, we want to improve your competence. So what do you mean by a competence? Competence mean for your knowledge, your attitudes, your skills, and your attributes. The knowledge, what do you mean by a knowledge? So knowledge about your industry or financial industry, knowledge about your bank, knowledge about your product and services, knowledge about your environment, and things like that. And the skills means your technical skills, your conceptual skill, and your HR skills. So how can you look forward in your banks as the branch is concerned, right? So through this session, so what we are trying to do to improve your competence levels, right? So these are the final expectations of in this section, right? Let's look at it. What are the things, what are the areas we are going to cover during these two sessions, that mean today and the next Saturday. Okay, first we're going to discuss in detail the banking industry analysis. Now, banking industry analysis, what we are going to discuss, the basically what is the bank environment uh, and competitions, how industry is growing and things like that. And next, we going to discuss industry versus your bank. within that framework, what is your bank position? Next one, the financial crisis or trust and confidence, the importance of trust and confidence in the financial businesses. And then the next part we are going to discuss in detail, how to manage the client's confidence and ethics of conducting your business. And the last part, we are going to discuss about the future of bank branches. Okay, these are the areas we are going to cover this 8-hour period. Okay, let's first look at it. What do you mean by a business environment? Let's look at it. Now, under banking industry analysis, we are going to discuss five main areas. What are these 5 main areas? We're going to discuss about the business environment. We're going to discuss about the global and local banking market, the present position, and how we are going to classify who are the key players in the financial or banking market. Next, the how we are going to classify, how we are going to categorize the banks specifically in Sri Lanka, and the profitability. That's the bottom line. So everybody is expecting bank need to perform or bank need to run with profits. So as we discussed before, so what are the areas we are going to cover under this 8-hour period? One is the banking industry. Second area, the main area, industry versus your bank. Third area, what is financial crisis? How the trust and confidence important in financial crisis situation. The next one, how we are going to manage the client's confidence, and we discuss about business ethics in that context. And the final area we are going to discuss future of bank branches. Okay, and then we explain to you under the banking industry analysis area what are the subtopics we are going to discuss. One is business environment, the global and local bank market, what is the present position, who are the key players in the market, in specifically to Sri Lanka banking market. So how we are going to categorize or classify banks, and we discuss about the impact of the profitability. Right. First, we look at it, business environment. So as we all are aware, so our business environment today, we call them as is a VUCA environment. Or some people are telling VUCA, or some people are telling VUCA environment. So what do you mean by VUCA? So VUCA having 4 letters. One is V. V mean volatility. So business need to carry out in a very volatile environment. So what do you mean by a volatility? Volatility mean the speed of change in any industry or any market. The speed of change. So we are living in the environment, the things are keep on changing, but changing at a very rapid rate. So that is what you call volatility. The VUCA we stand for. So you mean the uncertainty. You mean the uncertainty. So what do you mean by uncertainty? uncertainty means the extent to which we cannot confidently predict the future, right? So we very difficult to confidently, it's difficult to predict the future. So what is going to happen in the future? So the environment we are living, so therefore volatile and uncertain. The third character, the third symbol is called C. C's letter stand for complicity. Now, what do you mean by a complicity? The number of factors that we need to consider is very high. And their variety and the relationship between them also very high. So therefore, very impossible to fully analyze the total environment. So that is why we call them as complicity. So there are a lot of factors need to take into account or take into consider when you develop our when we develop our strategy, and we need to look at it, the interrelationship with these variables. That is what you call complicity. The fourth character is called ambiguity. Ambiguity. What do you mean by ambiguity? So the ambiguity means the lack of clarity about how to interpret something. So that is due to lack of information. So information is incomplete. So harder to grasp and the control. So those are the four words where the VUCA environment is we are referring to. So today, our businesses, not only banking, for that matter, for any business, is we need to carry it out under VUCA or VUCA environment. So we mean volatility, that means speed of changing, the things are keep on changing, very rapid rate. You mean the uncertainty, we cannot confidently predict the future. And the third one is a complicity. There are so many variables or factors we need to take into account. And the last one, the ambiguity, that is lack of clarity. So that is how we are referring this VUCA environment. So the banking business, so the branch operation, we need to carry out under this VUCA business environment. I think now you understood what you mean by the VUCA. So under the banking industry, so we are in a highly VUCA world, right? So now we move into the second point. You see, we discuss a little bit of the projections about our growth, because we cannot carry out our business if the country's economy is not doing well. It is very difficult to smoothly carry out our business. You know that according to the IMF prediction in June 2020, so the world economy is not doing well. Now, if you really look at it, first we look at it, the global aspect. So the global economy they have identified is contracted by around 5 to 6%, or maybe during the period in 2020. But countries like India, countries like Britain, and for USA, some shown a negative growth, almost around 10% range. But only China has shown 1.5% positive GDP. Only country has shown, all other countries have shown a huge GDP negative growth rate. What is the context in Sri Lanka? Now you see in Sri Lanka, what is our economy? What is the Sri Lankan economy? The Sri Lankan economy, mind you, so we had it is around 85-90 billion US dollar economy, billion economy. So that's our total market, right? That is our total market. So the market has grown during in 2017 in Sri Lankan economy. GDP growth rate is around 3.6. In 2018, it's come down to 3.3, and 2019 it has come down to 2.3. So what is the present expectation of the country, the Sri Lanka's economic growth, and we are expecting around, according to the central bank statistics, they said around 1.7 contraction. That means minus. We had two times before we had a negative growth rate with GDP, but this 2020 we are expecting, according to the CBSL, around 1.7 negative growth. But the IMF and the World Bank, they predict it's more than that. It may be around 5 to 6% contraction. So why it is important? Because if the economy is not doing well, we are losing our businesses. So the bank will lose, therefore our branches, our operations going to have a bad impact. That is why we are in a highly VUCA environment. All right, I think you have got an idea about the world and the Sri Lankan uh, environment, economic environment. So let me look at it now. The next point we are going to discuss. We have just discussed the business environment, and we discuss about the global and local environment. Now, in this context, we are going to discuss what is the World Bank environment. Oh, what is the bank market? Now, how many banks you think in the world? So, and there was estimated around 30,000 different banks in the world. There are 30,000 banks, different type of banks, right? 30,000 banks. And what is the total asset base of the World Bank? And there was estimated around is around 150 US dollars trillion. That's a total market, the world market, world banking market. If you think it is around 150 US dollars trillion, right? Trillion. Now, if you really look at it in that sense, the present position. So if you really look at it, these are the 25 large banks in the world based on the asset. So it consists 25% of the bank asset base is basically occupied 25 trillion. That means, so we are the world banking environment or the market, we call them as oligopolistic market. So it's like Sri Lanka, also the same. So this is the world. Okay, coming back to a Sri Lankan market. So some of the slide is not available. I just put it to you. So what is the asset base of the banking industry in Sri Lanka? What is the asset base of the banking industry in the Sri Lanka? If you really look at from 2015 to 2019, we discussed 2020 later on, right? This is an asset base. So 2015, the banking industry is having around 8.1 trillion. And then in 2016, so we had around 9 trillion. That is the total asset base in Sri Lankan banks, right? In 2017, it comes to around 10.3. And in 2018, it's 11.8. And 2019, it's something around 12.5 rupees trillion. That's my total market in terms of asset base. So asset is usually growing at a range of 12 to 15%. So it is important. So based on that only your bank, and then it's go to the branch, they will look at it. How can you improve your asset? How can a bank or branch improve your asset base? One way is granting more loans and investment. So this is how you can improve your asset base, right? Or at the moment in 2019, we have 12.5 trillion. Now let's look at it. What is our deposit base in Sri Lanka in the banking industry? So again, we go from 2015 to 2019. So we look at it from 2015, our deposit base is around 5.4 trillion and go up to 6.3, and then they move into the 7.4 trillion in 2017, and then 2018 it goes up to 8.5 trillion, and now 2019 our total deposit in the banking sector, all banks, right, 9.16 trillion. So it is basically increasing at the rate of 14 to 17%. So why all these things are important, I will explain to you little while now. And these are the how the banking sector deposits are growing, right, in Sri Lankan bank. And the next one, we look at it from the loans and advances. What is the loans and advances given by the banking sector in Sri Lanka? If you really look at it again from 2015, we have given 4.7 trillion loan, like term loans, overdraft, housing loan, pawning, you name it. So total number of loans given in 2015 is 4.7 trillion, and 2016 is increased to 5.5, and 2017 is increased to 6.4, 18 is increased to 7.7, and that's the important thing in 2019. Now you look at it from 2015 up to 2018, there may be a something around 15 to 18, 19% increase in loan portfolio in the bank. But you noted some significant figure in 2019, that if you're compared with the total loan given by the banks in 2018 is 7.7. These are balances, right? In 2019, you noted only 7.9. So when you look at it compared with the other years from 2018, 2019, so the banking sector has not given enough loan. So only 2% increase. That means so bank has not given much loan in 2019. That is the total figure is 7.9. Only 2.2 trillion, that is equal to around 20 odd billion, right? So you noted that this is the Sri Lanka, the banking sector, loans, deposits, and the assets. So that's the total market, right? Now you look at it from branch point of view. Now you can think about from your bank, and this is my total market. From that, how much is your bank is occupied, and from that, how much your branch is occupied. We are going to discuss that factor is little later on, right? I think now you understood the what is the total market as far as the deposits, loans, and assets, right? So first look at it again. What is a banking sector asset base as of 2019? 12.5, how it is increased, and then what is the deposits? Presently 9.16, how it is increased, what percentage, and then loan and advances banking industry, what is the growth rate, right? So this is up to 2015 to 2019, and this is your business. So banks are involving in all these type of activities. Now let's look at it from 2020. Right? That is a bad year. If you really look at it from 2020, you noted that Sri Lanka's economy impacted by the COVID-19 pandemic, not only Sri Lankan economy, we discussed earlier, entire world, the global economy was impacted with this devil called COVID-19. Still, we are facing. Now, during the phase of the various instabilities, right, and the COVID-19 outbreak, so we had not a good time also, because before COVID-19 also, you noted our economy is coming down from 3.7 from 2017 to end up with finally something called 2.1. So that's not a good, anyhow it's coming down, but the COVID-19 is further accelerated this slow growth rate, right? And so because of this COVID-19, so banking industry in Sri Lanka has enabled alternative working model. We also try to look at it, various ways you can serve the customer and in use of modern technology. Now, even for these days, you see a lot of banks are now advertising about their digital channels without getting involving in the physical to the banking businesses. So they are promoting a digital mode of interactions, right? And also remember, now this COVID-19 also forced businesses all types to relook at it, rethink of their business model, and how can you add value to customers under this difficult time period, right? So we are facing now from March, now November, the entire year we have faced with a lot of issues. You know, in Sri Lanka, who is our regulator? Our regulator is the Central Bank of Sri Lanka. Now, as a regulator, so you know, the Sri Lanka, the banking sector is the backbone for any economy. So we as the banks, we need to support the Sri Lankan economy. So the bank, central bank have some monetary policy instruments, what you call the monetary policy instruments to address this economic bad times, right? So what are the monetary policy instruments? Usually Sri Lanka central, our regulator, the central bank is using, is what you call one factor is reserve requirement, statutory reserve requirement. So anyhow, if the country's economy, so central bank using these policy instruments according. Now, what are the policy instruments available for central bank under these conditions? So one is reserve requirement. So what is reserve requirement mean? You know, every bank, they need to keep, especially commercial banks, need to keep from the deposit certain percentage with the central bank. So that is what you call reserve requirement. So in early days, so the last year, it was 6% and it was bring down to 5%. Now, what is the percentage of reserve requirement? Is they have deduct 3%. So now present reserve requirement means how much? 2%, right? The reducing the reserve requirement, what happened? There may be enough money available with the banks to do businesses, to give more loans to customers and things like that. So the reserve requirement at the moment is around 5%. Those are one monetary policy instrument that the central bank can use to stimulate the business activities, right? Reserve gap. Another instrument available for central bank, so we all are aware, one is what you call open market operation. We call them as OMO. So what is open market operations mean? So the central bank has a regulator, can control the economy. Now, how can we control the economy through open market operation? So, what central bank is doing, either to purchase the government securities. What are the government securities? Treasury bills and treasury bond. Either to uh, purchase the government securities from the market, or maybe sell securities to the government. Now, the moment you say purchase securities from the market, what you mean by that? So that means, so uh, so we are expand the uh, market. I mean, expand the money in the banking system. So sell mean, so we are selling mean. So again, you are trying to contract the market. So through that, so we in a position to release more liquidity to the market, right? Under COVID situation. So how the central bank is using the another instruments is available with the central bank. We call them as policy interest rates. Now, everybody, you are aware about the policy interest rate. Now, the policy interest rates mean basically we call standing facility rates. We call them as uh, standard lending facility rate and the standard deposit facility rate, right? So these are, we call them as, at the moment, what are the deposit facility rate? Standard facility rate is around 3.5, and what are the lending rate is basically 5.5. Is going to that level. Okay, so then, so through monitoring that, so that is why the prevailing interest rate is very low for lending as well as the deposits. Then what are the other instruments available is the bank rate. Now, bank rate is automatically is 8.5. It is with the changing of the standard rates, the standard facility rates, the bank rates are automatically changing. Then the next one is ceiling on interest rates. Now, government has given instructions, you cannot give charge more interest from certain loans, maximum of, they have given a ceiling. And then we have a foreign exchange restriction. That means, so you are not supposed to invest money in IA accounts and things like that. Okay, these are where you can control foreign exchange. And the third instrument available with the central bank, what you call a moral assessment. That means, rather than using the authoritative directions to the banks, the central bank is requesting the banks politely to do these things to boost the economy and protect the poor, COVID affected, business people. So those are we call morals. So there are four ways basically where the central bank as our regulator can use these monetary policy instrument to address these bad economic situations of the country. Right. So as a result of that, you see, since March 2020, with this policy revision, so instruments, so the central bank facilitate bank to available more liquidity to give more loans to customers. So Through that, the central banks also introduced the moratoriums and adverse circumstances extenders and curtailments of imports, the imports restrictions. As a result, we have some problem with open LCs and all, and foreign currency. All these, what we did to protect the country and protect the economy to go. Right? So these are the some of the initiatives taken by monetary, by the central bank, the monetary board of the central bank through available instruments for them. Now, why we are discussing all these things? The important things why we need to discuss all these things, for it will impact my branch operation, because certain decisions taken by the central bank may impact your bank, and through the bank it is impacted your branch operation. So you are as a branch, so we are difficulty of getting deposits, but at the moment the deposits are coming, but you are facing a lot of issues on that. Okay, I think you understood all these things now. The beyond 2020, so what is happening? So we discuss. So let's look at it now. The banking industry with some supportive things. We look at it from 2020, the Q1 and the Q2, that is the second Q. Now we discuss, can you remember? So we discuss in asset base in 2019, so that is 12.5. Now what is the asset base is now? Asset base is now in total asset in the banking industry is 13.3 trillion. That means 13.4 trillion. Now what is the 2020 first half? The asset base increase from the last, you say 12.5 to, that means almost 1 trillion increase during the first 6 months. Right now, if you really look at the loans and advances, so you noted that in 2019 7.9. Now you look at it in 2018, so we had 7.7. Now we increase only up to 7.9 the loan and advances, but you look at it now in the second quarter, so the figure has gone up to 8.3. So that because of, due to what? Because due to the banks was given more loans to the customers, right? More working capital loans is given, and we giving a lot of loan facilities to term loans to for business people to boost their business activity. So those are some of the things. Right, so we discuss, and then the deposits, if you look at it, the deposit, and from 2019 we had around deposits of 9.1 trillion, but now it has gone for 9.9 trillion, almost close to 10 trillion the first half. So the deposit also now increasing, right? Okay, so now you can idea about the present situations about the Sri Lanka from 2020, right? So with all these things, now you see we have noted due to the COVID-19, the drag on the economy was reflected in the domestic bank sector, because the economy is not doing well, it impacts the banking sector, because banks are basically involving business activities, supporting the business activities of the people. So that is how banks generated the profits. So the second quarter of 2020, so it's not so good year for banks, because the country is not doing well. It fairly impact the banking. If the bank is not doing well, that your branch also pay impacted your business, because the banks has given targets, banks branches are given targets, so you not in a position to achieve your branch target because of that situation prevailing in the country. And you see, even though we have given loan in the second quarter into 2020, so there may be a little increase in loan, but now in the third quarter, so banks try to give more loans, that the quantum of given loans is little increase more than the first two quarters. So that means you were given, you are instructed from your head office, or from the head office was instructed by the government to give more loans to the business people to improve their uh, businesses and bring back to the economy into smooth way. So when you are compared with the second quarter, the loans given, and with the third quarter, so loans have increased. That means if you really look at it, the branches are giving more loans during the third quarter under Saubhagya scheme. But still, so private banks are not much, but the government bank has given a lot of loans under Saubhagya scheme. But anyhow, so the contributing and for the uh, improve, because of the economy is not doing, the business are not going, so there is a tendency people for non-performing loan to go up. So if you really look at it, the net interest income, that is your income level, is declined by 3.3% in the first half of 2020. So your profitability in terms of net interest income has come down. So that is due to low credit growth and declining interest rate and debt moratoriums imposed, net interest margin and things like that, right? So these are the factors. So the banks are not doing well. For that matter, your branch also have some problem of attending the your targets, right? Okay, so I think now you understood the situation about the bank situation, as well as the in 2020, right? So that is the industry situation. So what is the present positions about the local banking market, right? Okay, now let's look at it. So you got an idea about what sort of business we are working. We discussed we are working with VUCA environment. Then what is the market, the banking local market situation, the present situation, and the past situation. We discussed 2015, what is our bank deposits, loans, as well as the assets, how it grow. And we discussed 2020, what's happened in the market, banking market. Now, the next point under the banking industry analysis, we are going to discuss who are our key players in the market. Who are the key players in the market? That means who are our competitors, right? With whom we are going to fight. So as a branch, we need to know who are our competitors, right? Now let's look at it. Who are the key players in the banking market we are dealing with, right? So before that, so we are going to analyze this, and we look at it, the world situation, as we explained earlier. Who is the number one bank in the world? So if you really noted that in the world's banks, right, that means the 10 years ago, maybe around 5-6 years ago. So now, as at today, you look at it, the number 1, 2, 3, 4, four places are occupied by the all China banks. But That is not the case. Maybe 5, 10 years ago, the number one banks are American banks. Wells Fargo, right? Citigroups, all are American banks in the number one, two. But you look at it now in 2019 and present, number one banks are replaced the American banks by the China. Number one, two, three, four banks. Largest banks in the world are Chinese banks. That is the issue we are facing, right? So this is the world situation. So we are not worried much about the world situation, but you need to understand the present situation. The world number four banks are basically occupied by the China asset base of US dollar trillions, four, three like that. Okay. Now let's look at it now. Who are the key players in the Sri Lankan market? Now you see the Sri Lankan businesses is mainly carried out by licensed banks. So you know what is meant by a licensed banks are licensed commercial banks and licensed specialized bank and finance companies, specialized leasing finance companies, then microfinance companies, right? Then licensed non-government organizations who also involving in giving more credit and some of the banks. So these are the key players in the market. Right now, if you really look at it in Sri Lankan banks as at in November 2020, if you really look at it, how many banks in Sri Lanka? We had around 29 banks in Sri Lanka. Under licensed specialized bank, we have a six licensed specialized banks, and we have around 23 licensed commercial banks. 23 commercial bank, but this is more in 2020 beginning. Why? Because the two banks, the two foreign banks has closed their business operation in Sri Lanka. One is, as you are aware, is ICICI Bank, and the second bank is the Axis Bank. So those two banks are not operating in Sri Lanka because they were taken permission from the central bank to stop their business operation in Sri Lanka. And earlier we had around 7 licensed specialized bank, but Lankaputra Development Bank, you noted that, so it was acquired by the RDB, the Regional Development Bank. So therefore it has come down to 6. And last year, so this year, there is something called NSB, National Savings Banks, also acquired the Sri Lanka Savings Bank, but still Sri Lanka Savings Bank go as a separate entity, National Savings Bank go as a separate entity, even though they have acquired. But license as far as the Lankaputra Development Bank was taken over by the is acquired by the RDB, so therefore there's no more Lankaputra Development Bank existing, so that is why it has come to 6, right? So okay, now we had around 29 banks in Sri Lanka, right? I just put finance companies for it. I will explain it later on. Now you have an idea about what are the banks in Sri Lanka. So that is your market. So you as a branch operation person, so branch operation, you need to know your competitors, right? So you need an idea about your bank. So these are some of the licensed commercial banks. So you have noted these are the famous banks in Sri Lanka. These are the key players in the market, and these are some of the specialized banks in the market. And then you have some what you call the non-bank financial institution. Non-bank financial institution. So that means basically, even though they are not directly competing with us, but they are to some extent also competing with us. So how many finance companies in Sri Lanka. So we had around uh, now as at today, right? As at today, before that we had around 40 odd banks, finance companies. But this year, you know uh, the the finance has closed. Then what else? The finance has closed, and then the ETI and Swarna Mahal also closed, and TKS Finance closed in 2019, not this year, right? TKS Finance has closed last year. So this year, the finance company closed, and ETI and Swarna Mahal finance companies closed. So therefore, we had around 39 finance companies at the moment. But so the Sri Lanka, this non-bank financial institution is facing some problems. So therefore, in meeting capital adequacy requirement, so therefore, at the moment, this Singaputra Finance PSC, Singaputra Finance PSC, you have noticed some newspapers, and there is a discussion is going on for amalgamation with National Lanka Finance PLC. So therefore, once is still there's a board of directors of Nation Lanka Financial National Limited, right? Sorry, it should be Nation. You have to delete the national. It should be Nation Lanka, right? It's not a National Lanka Finance. It should be Nation Lanka Finance, right? So you need to delete that part. Nation Lanka, not national, is Nation Lanka Finance Limited. The board of directors of Nation Lanka Finance PLC and the Singaputra Finance PLC, and they have announced that they have executed term sheet agreeing to seek an amalgamations of Nation Lanka Finance PLC into Singaputra Finance PLC. So there may be a consideration. So amalgamation is going to take place. If it is happened, now NBIFI, that means Sri Lankan licensed finance companies, may become to 38 as of today, right? So we have around uh, 4 leasing companies in Sri Lanka. So altogether we had at the moment 43, but remember we had around 50s and 60s amount. But what is the total customer base? So all these non-bank financial institution, they have in around 3 million customer base, customers, right? So they have loan and 4 million deposits and customers. So they don't have a much customers, 3 million loan customers and 4 million deposit customers from the total populations. This is total, right? All together, all these 43 institutions having customers, so such amounts, right? 3 million and 4 million. Whereas it consists around the 1362 branches, and asset base is total asset base of all these 43 financial institutions, may around roughly around 1.4 trillion, and they have granted around 1 trillion above out of the total of you see the 7.9 trillion. So they are given only 1 trillion, right? So remember, so therefore non-bank financial performers have performed not to that extent where the banks are performing, but they are playing a separate role. Okay, I think now you understood the bank positions, the as well as the financial industry position. Right, now what we have discussed up to now, the business environment, and we discussed about the global and local market, past and the present bank positions, and we discussed now uh, uh, key players in the banking market or financial market, especially banking market. There are some insurance companies in the financial sector, but we are referring specifically to the brand sector, who are our competitors and things like that. right? You get an idea now. So now we are going to discuss about the bank classification. Now, how can you categorize the Sri Lankan banks? What is the basis? How we are going to categorize the Sri Lankan banks, right? So Sri Lankan banks. So what is the way? How are you going to categorize the Sri Lankan banks? Now, so we are going to discuss that in a little later, right? Okay, let's look at it. What is the method of banks categorized by the central by the banking industry? One method is as based on the asset base, right? The base on the asset base. Now, so if you really you have the tune with you now, you have the asset base. So we have listed down all these banks, and if you really look at it, so banks in Sri Lanka categorized based on the uh, asset base. Now, if you look at it, so Sri Lanka based on the asset base of the bank, we are categorized banks into large banks, medium banks, and the small banks, right? Top of that, we have, the banks, we have around 7 state-owned banks, we have 12 domestic private banks, right? And we have a 10 foreign banks in Sri Lanka. This is how the composition, right? We have a 7. So what are the 7 banks, Sri Lankan banks? So these are Bank of Ceylon, People's Bank, right? State banks, right? 7 state banks. So what are the Bank of Ceylon, People's Bank, then National Savings Bank. What else? Then we have a Pradeshia Sanvartana Bank, so what you call the RDB. So we have a 4. We have a Housing Development Finance Corporation, HDFC, and we have Sri Lanka Savings Bank, right, and then we have a state mortgage bank. So those are the government-owned 7 banks. So what are the domestic private bank? We have a commercial bank, we have a Hatton National Bank, Sampat National Development, NDB, Ceylon, DFCC, NTB, Pan Asia, Union Bank, Amana, Cargills, and with Sanasa Development Bank. So these are the so-called 10 domestic private bank, 12 domestic private bank, and we have a 10 foreign banks, like if you know from HSBC, and then we have the Standard Chartered, Joyce Bank, Indian Overseas, Citibank, Bank of China, State Bank of India, Public Bank, and then the Habib Bank. So these are the foreign banks, right? So now you have an idea about your. Okay, now how you classify your banks? Your banks are classified by into 3 large banks. One way of classifying, right? This is a one way of classifying large banks, medium banks, and a small banks. Large banks, medium banks, small banks. Now, based on the asset base, so how you categorize from above 500 billion and above, 500 billion and above asset base, we call them as large banks. So medium banks are, we call them as 200 to 500 billion asset banks. Asset base, we call them as a medium banks. So less than 200 billion, we call them as small banks, right? So the Sri Lankan banks, based on the asset base, you can classify large above 500 billion, medium 200 to 500, small banks from less than 200. Now further classification in large banks, we can further categorize into 3 groups, right? Large banks, large bank mean above 500 billion. Medium mean 200 to 500. Small banks mean less than 200. If you really look at it in Sri Lanka, we have around uh, one bank is more than 2 trillion. Now, what is that bank? Is the largest commercial bank in Sri Lanka. That is commercial bank. Bank of Ceylon. That's a above thing. So you noted that. What is as at 2020 September, as at June 20th, June 30th, the first half. So we have around 2.7 trillion. Now it, I think, is comes to around 2.8 or something. So Bank of Ceylon is above 2 trillion. And who is the next? The next is the People's Bank, right? The People's Bank is, we have around 1 to 2 trillion. So we had 5 banks in Sri Lanka. People's Bank, then the commercial banks, and then the National Savings Bank, HNB, and the Bank of Ceylon. So these are the 5 banks where we have in around 1 trillion to 2 trillion range. So we have around 2 banks between 5 billion to 1 trillion. So those 2 banks are NDB and ND. Ceylon, right? 2 banks are NDB and Ceylon. Those are the 2 banks. Okay, so in between, those are all together. So therefore, we had around 80 billion. But important things, 80%, almost 80% of the Sri Lankan asset base is basically is having these large banks. That's the important thing, right? These 8 banks, which consist of Sri Lankan asset base, almost 80%, right? So we have 2 banks, medium banks, and then that is basically we call them as HNB and NTB, as well as we have around smaller banks, 2 categories, again 100 to 200 billion. We have around 5 banks, and all the rest of the banks, the 13 banks, are below 100 billion. Right, so this is the banking sector. How you can classify or categorize Sri Lankan banks based on assets. Now, your branch, what is your branch asset base? Right, you also can calculate, right? What is your branch asset base? Right, so that's also important to understand. Right, let's look at it now. The another way you can classify the branches, right? So first one based on asset base. So Sri Lankan banks can be categorized based on asset base. Now let's look at it. The second method, right? The second method, banks can be categorized based on the capital adequacy count, right? Based on the capital adequacy count. Now let's look at it. Before that, so we are going to discuss a little bit of what is the minimal capital requirements you need by the banks. Now you see the locally incorporated bank from the 31st December as of end this year, you need to have a minimum capital of 20, either to open or to improve your present asset capital base. And from locally incorporated licensed specialized bank, you need to have a capital of 7.5 billion, whereas banks incorporate outside Sri Lanka, the foreign banks inside Sri Lanka, we have 10 billion, and corporate outside we have a 5 billion. Now remember, and this minimum capital requirement, because of these COVID-19, was extended. So we were supposed to improve the limit from 31st December, but it is improved to 2021. So it was increased, it was postponed. Your capital requirement was postponed to 2022, right? Okay, so what do you mean by the domestically significantly important banks we call? So in Sri Lanka, how many banks we have in? we are having around 39 banks, right, in Sri Lanka. Now, all banks are considered to be a domestically important bank. Now, I want to tell you something also. Now, your bank, which category your bank is belong to, whether to go for larger bank category or your bank is under middle grade category or middle level category, or your bank is your a small level category. So when you're setting your strategy, you can think, okay, how can become my bank become a medium bank? Suppose if you are in the small bank, if a medium bank can think, how can I become the larger bank? Like that, you can set your strategy objectives on that basis. Right now, you know. So which category your bank is belong to, right? Now the second way of categorizing is called domestically significantly important bank. Now DSIBs, that mean, so we have 39 banks. So who are considered to be a systematically important banks? What do you mean by a systematically important bank? That means, so your bank is important. So we discuss Sri Lankan bank structure is oligopolistic. Few people are playing a higher role. If one bank is collapsed, it really impacts the entire banking industry. So the central bank has identified, earlier they identified based on the asset. Now they have changed. Now they come up with a new methodology to understand who are a domestic systematically important bank. The collapse of such bank have a real impact of the economy, the banking industry. So they may consider these as important banks under four categories because of the size, interconnectedness, substitutability, complexity, and cross-judicial activity. These are the four categories I'm not going to explain to you. Remember, so what are the framework they use is to identify your bank as a significantly systematically important bank. So these are the category they may look at it to categorize your bank. In Sri Lanka, 39 banks as considers to be a domestic systematically important banks, right? Just to get an idea on that. As based on that, so this in Sri Lanka, you know, these domestic systematically important banks are considered as like this. So this dealing with certain capital adequacy requirement. Now I'll explain to you on this. Now in Sri Lanka, if you're maintaining certain levels of uh, level of capital adequacy, the capital adequacy requirement. Suppose your bank are maintaining, right now, this is not the revised one, earlier one. Uh, if you want to maintain your capital adequacy requirement of 14% and about 13.5%, we call them as domestically important banks. Right now, I just want to clearly explain to you this point again. Remember this, right? I want to categorically explain these informations to you. Suppose your capital adequacy requirement, capital adequacy, we call them as CA, is usually is around about 13.5. We call them as significantly or systematically important bank, right? Now, systematically important bank mean your capital adequacy ratio is 13, more than 13.5 is systematically important bank. So all the other banks is list around 12.5%. So all the other banks, we call them as non-systematically important banks. Now again, the central bank in Sri Lanka has identified those so-called domestic systematically important banks. They have further divided into three buckets, right? Okay, now I'm again explaining to you to understand. Sri Lankan 39 banks categorized into two broad banks. One, systematically, right, domestics, that you call domestic systematically important banks, and domestic systematically not important banks. If you say like that, those are not domestic systematically important, right? Two types. So what is the criteria? So they look at it from the points, right? From the points are size, interconnectedness, substitutability, complexity, and cross-judicial activity. So those are the four areas you consider them as domestic systemically important banks or not. Accordingly, we have a two type, but usually the ratio is around 12.5 and less than that. Capital adequacy, if you maintain, all things are called them as, we call them as domestically, not systematically important bank. But all the other banks, about 13.5, we call them as domestically important, systematically important banks. Now, systematically important banks also covered under three buckets, right? So within the domestic significant banks, systematically important banks are divided based, comes under three buckets. So what are the three buckets? Mean, so your capital adequacy 12.5, you need to have another 1.5. That means if you have 12.5 plus 12% point 1.5, that means so you have around 12.5%. That means the bucket number one. So we have around two banks in Sri Lanka. They have identified as People's Bank and the HNB as domestically important, systematically important bank, comes at the bucket one category. Those are the two banks, People's Bank and HNB. And bucket number two, we considered as the domestically, systematically important banks as Bank of Ceylon and commercial banks. So in Sri Lanka, we don't have a bucket three category at the moment, right? So all other banks comes under other category, right? So remember, so therefore we have, according to the latest classification, we had four important systematically banks. One is People's Bank, Commercial Bank, Bank of Ceylon, and HNB. All others are not domestically important banks according to this. So therefore, now again I want to tell you, now based on the present situation, the central bank has revised the capital adequacy requirement you need to maintain as bucket 1 and 2, 12.5, that is basically People's Bank and the HNB has to maintain total capital adequacy requirement of 12.5. Bucket number 2, that is BOC and commercial bank, need to maintain 13%, and all the other banks need to maintain 12%. So 0.5% has come down, 1% from the domestic banks has come down because of this COVID, right? Okay, so now you got an idea about how Sri Lankan banks are categorized based on asset. The second one, the based on the capital adequacy requirements. I hope you understood the present way of classifying the Sri Lankan bank. So your banks comes under what category under this? So you need to understand. Okay, So we have learned now. So we are in the banking industry analysis. Under that, we discuss in the greater length what is business environment and what is the global and local bank market, past and the present position, and we discuss who are the key players in the market, we both global and local, with special reference to local market, banking market, right? And how banks in Sri Lanka classify one way based on the asset base, and other one is the based on the capital adequacy requirement, right? And we categorize domestically important banks and non-domestically important banks, right? And the last point we are going to discuss under banking industry analysis, the profitability. And that is important area we need to understand, because every banks we need to understand, they are all their stakeholders are look at in the bottom line. So that is the profitability, right? Now let's explain now. So Sri Lankan banking industry analysis in terms of profitability. So under profitability, so we are going to look at it, our profitability in few main areas, right? Okay, these are very important for your branch banking, right? One is the tax reforms. So what are the tax reforms, right? So I will explain. Then we'll discuss how the profitability impact from the debt moratoriums, right? And the third point, the low interest rate environment, how our profitability impacted, and high risk level in PL, how it impact the profitability, and the impairment cost associated with the applications of SLFRS 9. So that's, we need to allocate entire our loan portfolio as lost, and it is to be deducted from our P&L. So new SLFRS requirement, how profitability. So the most important things for your branch level, and what is the CASA trend, right? So CASA trend play an important role specifically for improve your branch profit as well as your bank profits, right? So we discuss about the what is the CASA trend today, right? You know what you mean by the CASA trend mean? Current assets, saving assets ratio with the total deposit ratio. We discuss what's the industry, and later on we discuss about your branch level, bank level, right? And further you can look at it from your branch level. So right, and then, and we try to touch a little bit of, I'm not incorporated to your this thing, but you try to discuss little bit of new budget proposal, that is 2021 new budget proposal, how it impact the profitability of the banks, not the budget proposal, and we are not going to discuss about the entire proposal, but specific reference to finance or specific reference to banks, right? So these are the key areas we are going to discuss under profitability, right? So I think you learned a lot on this as a bank branch manager, or one day you're going to become a branch manager. You need to understand what is the industry, how industry is working, how industry is performing, what are the issues. So for that only we explain all these things, right? Okay, now let's look at it one by one, right? Profitability. Okay, so see, with this new government came into power in last December under the president, so they have changed the tax structure. So the banking sector profitability was helped with this tax reforms introducing December 2019, and that tax thing is going to continue for the next 5 years. That is what the budgets people are talking. So this tax structure, they may going to continue for next 5 years. That's a good sign of this budget, right? Okay. So now what happened? So they have removed the entire debt repayment levy of 7%. Where earlier government would bank need to pay 7% debt repayment levy. So that is totally eliminated. That's a good thing to banks. Can improve the profitability. Second, nation building tax 2% they have taken now. So 9%. So another benefit to the bank to improve their profitability, right? But the corporate tax, the corporate income tax reduced from 28 to 24%. Reduced to 28 to 24%. So these are the important reforms proposed by the central bank, proposed by the government during December 2019, even though it is not so gazetted yet, because it has to be implemented, it has to be gazetted to what we need to understand. We need to these reforms has to be gazetted, right? So, but that's a huge relief to the banking sector. So those are the positive signs of the banking sector where you can improve the profitability on this ground. 7% of debt repayments eliminations, then 2% of nation building tax elimination, breaking down the corporate tax. Usually the banks need to pay to the government from 28 to 24%, and huge amount, right? So the banks are the heavy taxpayers to the government, but those things comes down and some improve the profitability. That's tax reforms, the positive sides of the improving of the profitability of the bank. So you remember, so all these things are improving. That means it's good for your branch as well. Second point, right? Now, as we result, tax reforms we discuss. So tax reforms are good, right? For improve the profitability of the branch as well as the bank and the branch. But remember, because of this COVID-19, right? But then the profit impacted because of the revenue compression from multiple sources came because of this COVID-19 issue, right? Now let's and important things about the debt moratorium. So we have been postponed the people payments of debt, and for the tourism industry it was postponed for another 1 year. So during this postponed debt moratorium period you are charged only for 7%. So you see, and good for individual customers, but it's not good for the bank. It may be impacted the profitability, because what happened there, basically the people go for moratoriums. What happened, people payments, because remember the moratorium is not fully waive off your debt, right? So it is a postponement. It is a extended your credit. That's all. Is a postponed, right? Not fully term eliminating, right? So therefore, one day you have to pay. But the problem at the moment, there is a possibility of NPL. So you can see now the NPL is going up. There is a possibility of not paying, right? So therefore, the profitability under pressure because of that, as well as given the low interest rate environment, the margin is very thin now, right? Loan, because government has given the ceiling, so you can charge from the customers as for the lending products. So therefore your margin is thin, so you will impact the profits, right? As well as this this pandemic, banking sector profitability is like to be impacted by expected increase in impairment cost associated with the appreciation, according to the SLFRS 9 rule, we need to allocate. So it is impact the profitability, right? That's another area we need to understand. Even though we are not paid, we have to allocate as per the accounting standard. So that's an impact our profitability. So there are multiple sources. It is impacted our profitability, but there are some positive side. What is that? That is, we are giving a lot of tax reforms through for bank to compensate on that. Right. If you really look at it, the profitability of the banking industry for the last 4 years, so it is okay to some extent, right? The profits are generally, only the banking sector usually enjoying a little bit of higher profit, and even for now, as far as you're concerned with the other industry. So, but in 2019, we will discuss little later on that figure. But profitability of the banking sector is somewhat okay at the amount, but the NIM has come down, but still. And the operational cost, also increased due to the calculations of moratoriums, so the operational cost has gone up a little bit, right? So it is impact the profitability, but the profitability is not going to impact now. It may be going to impact it later on 2021, right? Now just look at it, the positive things of the CASA ratio. What do you think about the CASA ratio? Now, CASA ratio, as you really look at it, some information here I have just to explain. This is very important for your branch. Now, how your branch profits improve. So if you have a more deposit base, which consists from saving deposits and more percentage from current account or demand deposits, that means for current account, you don't want to pay any interest, right? For savings, you need to pay a little less, right? So therefore, so your CASA ratio is increased. That means you have enough, you can earn a lot of profits. So that is why in your branch, the bank manager from the head office also telling, improve your savings balances, improve your current account balances and things like that, because it will give you more profits to your branch. Now let's look at it. In the present scenario, what happened to CASA ratio? Now, this is the fast information. If you really look at it, from 2012 up to 2016, now this side is your, you look at it from this graph, the dark portion is your total deposits, and the other one is the current and the savings balances. Now, if you really look at it from how you work it out from the total deposits is divided from your savings balance, the CASA ratio is around 30.2 into 30. Now you see the ratio has come down 2013, and the CASA ratio has gone in 2014 into 39.3, and 2015 is the highest in the last couple of years, is go to 40.3. So what do you mean by a CASA ratio of 40.3? Mean from your total deposits, 40%, this is an average, right? This is a banking sector, but you need to look at it from the bank, your bank, and then you look at from the branch, right? What is your branch CASA ratio? So what are the actions, what are the strategies taken by your branch to improve your CASA ratio, which really impacted your profitability, right? Now, if you really look at it, right, can anybody give me some suggestions? Now, in 2012, it is 30.2. In 2014 is go to 39.3. 2015, 40.3. That means huge amount. Why? Anybody can give me a suggestion why this CASA has gone up in 2015? That is the highest, right? If you really look at it, trend of the CSE from 2000, if you really look at it from 2015 to 2020, up to now, you see it has come down. Now from Y40 in 2015, Y2060, 37. The moment you see the differences between FD rates and the saving rate, right? So you see people tend to put your money in savings account because there's hardly any difference between interest rate of saving deposits as well as in difference between FDs. Now, even now in 2015, so FD rate and the saving rate are very less difference. So that is why people try to keep all this money under savings. So a lot of strategies developed by banks, individual branch and the banks to improve their deposit, improve their demand rate by offering a lot of facilities, right? And given specific targets to employees to get more canvas, more current account customers, right? And based on that, and earlier we had some competitions also. Right now, you can't have competitions like in HNB is done, Patung women and all. So if you're maintaining certain percentage of certain deposit money with your current account, you're going to have a raffle draws and things like that. But now you can do, but we had 40.3% CASA ratio during in 2015, right? Now it has come down to merely to 31 in 2019. During that time, there's a huge difference between interest rate of savings and term deposits. So therefore, people, if they have some money, so they are converted to term deposit or put it into the fixed deposit. Now, again, you have noted that now the difference in 2020, you noted slightly increase is come down from 40.3 in 2015 has come down to 31, and you noted from 2020 now it's going to catch up. This is the 6-month period, but if you really look at the third quarter figures, that figure has gone up 30, 34, 35, and the rate is going down. And that is a good trend of the CASA. It's good for improve the profitability of the bank as well as your branch, right? Okay, why? One factor is not because of anything your branch has done it or you have done it. That because of the reducing the gap between the FD and the savings. Now, this is a classic example, right? Other than that, so a lot of banks or a lot of branches are taking a lot of initiative to improve your saving balances and current account balances, because the moment your CASA increase, remember, it will impact your profitability. Now you see, and remember, it's a very important in the branch bank operation to see your CASA and what actions or what strategies you can take for improve your CASA level. It is very important in the branch level operation because the branch profitability can be determined by designing your CASA, right? That's the important things you need to look at it. But because of the prevailing conditions in the present situation in the country, and mind you, you don't want to have a you don't want to do anything because of the interest rate. There may be a tendency end of this year. Now this is 2020 up to 6 months, right? There may be a possibilities again going to, right? The highest CASA ratio may look at it. This is industry, right? It may be vary from your bank to another bank, and maybe to branch, right? So I will explain you later on that. I think you understood the CASA requirement, how it impact the profitability, right? The bank at the branch level, right? If you want to make your branch operation to improve your profits in your branch, so what you need to do, you need to improve your CASA level, because it's really contributing to your profitability, right? I hope you understood uh, this point, and you look at it, the impairment cost charge from the gross loan advances, and how it impact the businesses, right? Just to get an idea. Okay, now let's look at it. As I'll explain to you, I'll talk to you how the profitability of your bank as well as your branch impact tax reforms, debt moratoriums, low interest rate environment, risk of higher NPL, impairment cost associated with the applications of SLFRs, the CASA trend, and now we are going to look at it, the new budget proposal, how it impact your profitability. So I am not, as I told you, I am not going to talk to you on the entire budget, but I'm going to take some summary of the budget, right, in 2021, how it impact your businesses. As a good banker, you need to know the budget proposal, how it impact your businesses, right? Okay, right. Right. Okay. Some students are maybe not in more not actively taking part, but it's a recorded version. You can see from the another date, right? Okay. Let's look at it. The budget now. Summary of the budget, right? Should look at the summary of the budget in Sri Lankan budget. And this we are expecting about the revenue of so much, expenditure of so much. So there is a budget deficit. So, right, there is a budget deficit. Always, every country is having at the moment facing a budget deficit. In Sri Lanka, we are going to face around 1,500 budget deficit, and with top of that, we need to pay foreign debt. So, therefore, this figure is going to go up. Right. So, therefore, the deficit is percentage wise from the GDP is 9%. It's comparatively high, mind you. The Japan is the highest, the highest budget deficit country is around 200 odds. A huge country deficit loan taken. But remember, so this is a summary of the budget. So there is a deficit of 1,565. Now, how government is going to pay this? Are going to fill in this deficit two ways. One way is take the foreign loans, and also we going to go for domestic borrowing. Right. Now, what do you think? Right. So this budget deficit is going to filled by the government through foreign debts as well as from the domestics borrowing. Now, there is an issue of getting the foreign borrowing, because there is some restriction, because all entire world is facing a problem. So we have to borrow from either IMF or World Bank and some countries, right? So we need to borrow to fill this gap. Otherwise, we have to borrow from the local. So there is I don't know whether to what extent is the government is looking for debt financing, and we have to pay a lot of around 4.5 billion US dollars every year. We need to pay for at least for next 5 years. So altogether around 20 billion we need to pay with the interest plus debt foreign loans, right? And the government budget, they say they are going to reduce from 100% to 70 odds this debt repayment, right? So of course, if the entire world is facing some problem, if these IMF and the World Bank is not going to give us the loan, is the problem. So for that, we need to go for commercial market, so at a higher rate, or otherwise we need to go for domestic borrowing. So the moment we go for the domestic borrowing, what happens? There may be interest to go up, even though we have a standing rates for low rates, but there is a possibility of in the middle of the next year, there is a possibility of increasing the interest rates again, right? So that's something we wait and see, right? I don't want to predict on that. So my argument, my topic is how the banking sector benefited this budget, right? And this is was taken in the courtesy of Ernst and Young. So their proposal, I have taken some points, right? Okay, now you see the proposed by the government, they said commercial banks, not commercial bank, the commercial banks that invest a minimum of $100 million in Sri Lanka, international sovereign bond will exempt from capital gains tax and tax on interest. So they said, okay, if you want to improve the profitability of the banks, right? So what you need to do? So you need to get invested $100 million in Sri Lankan international sovereign bond. For that, so we have not going to charge for capital gains or tax on interest. So that's a good point for us, right? So how can we get 100 US billion? For that, we need to improve your remittances. So banks need to come up with to get more revenue from or more remittances from the people who are working abroad or Sri Lankan who are working there, right? So these are the one way of getting around $100 million. But all banks may be not in a position to invest 100 billion. So in certain large banks can do. We discussed the large banks, Bank of Ceylon, NSB, BOC, Sampa, May to HNB, commercial bank can do, but the other banks, maybe the middle and the smaller banks, they may not in a position to invest such a $100 million to get that benefits to improve their profitability. So therefore, banks may requesting the government to maybe to reduce this facility, right? Not 200 million, maybe based on the bank's level, maybe 25 million, 50 like that, but I don't know. But for one way you can improve your businesses profitability in your bank, what? Invest minimum of $100 million, so you get a capital gains and tax on interest. That's a good thing. In order to get 100 million, so you as a bank, as a branch, try to get more remittances from the foreign expatriates, come up to support the bank activity, right? So as a branch, you need to canvas more people who are in the abroad to send more money to your bank, and thereby you can make use of this 100 million used for investing in sovereign. But for that, you get a tax benefit. So that is what you can improve your profitability, right? How branch is facilitate this one point. Second point, Right? Now, I think you understood what I'm telling, right? So how bank branch will profit? How can branch contributing to the bank to generate more funds, US dollar fund, where your bank can invest, where you get a tax concession. That improve your profitability. That's the first one. The second point, and there is a loss provisions for investments in Sri Lankan international sovereign bond will be suspended for 3 years. And if the investment exceeds 100 billion, so there may be allocation that the IFR is coming to the scene. Allocations is can be considered, so thereby also can improve the tax benefits, allocations of appropriations, or what you call the provisioning, right? So for that, the law need to come to reforms to be established in the legal framework in order to get that facility, right? Third point, the method used to provide for doubtful debts will be reviewed. That is the one, and the measurements. When you're for accounting purposes, we have a separate system of calculations of doubtful debts. But as far as the central bank requirement, there's a different way of calculating the doubtful debts. So the new budget will talk about is a provide for calculations of doubtful debt. So accordingly, the provisions have to be changed. So that's a good sign for banks. Thereby, you can improve to some extent your profitability. But those are we need to wait and see policy, because these things are proposals, right? Methods used to be provided will be reviewed, right? It has to be come. So till such time, we don't know really what happened. Then another important things. Now you see, I explained to you in little, early stage of this in my lecture. So the consolidations is taking place because we have more number of financial institutions, especially for finance companies. We have around 39. So almost out of the 39, maybe 20 or 30 odd finance companies are facing some capital issue, capital requirement issue. So that is what the central bank as a regulator requesting for consolidations. Consolidation means so amalgamating 2-3 financial institutions together is called consolidations rather than one. Now at the moment I told you there is a discussion is going on between Singapore and Nation uh, finance company to amalgamate, right? So likewise, the consolidation mean not only one, two, there are 3-4 together. That is called consolidation, right? So that is what. So who is ever interested about the consolidation is important for Sri Lankan financial sector. But banks at the moment is okay, but especially for finance companies, right? And then there's a proposal, Council proposed to merge smaller finance companies or purchase a smaller finance company. So the cost of acquisition is deductible for tax. So that means so how the cost we are incurred for acquisition can be deducted from the tax. So that's a good sign. Therefore, there is a people. So the organizations are going to take over another organization where investment is encouraging because you get a tax deducted benefits. But now say for an example, bank take a finance company, and then the bank will get a tax concession is a different thing. Banks are established for some purposes, finance companies are established for some purposes. It is, I think, it's more appropriate to consolidate between finance companies rather than bank take the finance company, right? Because why we have finance company for some purposes, why finance companies are established for some purposes. If bank going to take that finance company, so we don't want to have finance companies at all, right? So therefore, this must be encouraged finance companies, but banks also may be encouraged, but it's not clear enough. But anyhow, all these proposals address the improve the benefits of the bank sector, improve the profitability. I think you specifically the first point, the US$ 100 million bank shares can be contributed to for that by supporting your bank to generate so much of foreign money, right? I hope you understood these points, right? But and then there's another suggestions. Now that's the bad side of the less profitability side. That is the suggested contribution to insurance fund. Now business with more than 50 employees. Now all banks is you see in the banking sector, is around 55,000 people are working in the banking sector. All banks is having more than 50 employees, is averaging from 3,000 to 15,000 for the large banks like Bank of Ceylon and People's Bank. They may have around 12 to 15,000 employees, but whereas the other private banks are ranging from 3,000 to 5,000, right? Ranging from 3,000 to 5,000. So all employees institution that include the banks having more than 50 employees are required to contribute 0.255% of the turnover to the insurance fund. So that is the huge fund. So banks are that's its impact on profitability, right? So these are the things you need to understand. This one is the positive side, and this point is the bad side. So there are a lot of proposals suggested by the 2021 budget, but I took what is relevant to the banking sector, right? How you can improve your profitability by make use of this budget proposal in 2021. Right, right. I think you understood the first topic, but we have discussed almost we discussed 2 hours, right, about the banking industry analysis. We discussed in 2 hours. We discuss the what is bank business environment and why we call it's a VUCA environment, and then we discuss about the global and the local market past positions as well as the present position, specifically for us to the banking sector. Then we discuss who are the major players in the Sri Lankan banking market, right? So we discuss the type of players to know the understand about your competitors, and then we discuss about how the Sri Lankan banks can be classified, right? It is my own classification, right, based on the asset base and based on the capital adequacy ratio, right? So you can classify the Sri Lankan banks according to large, medium, small, and based on the systematically important banks and systematically non-important bank. And then we discuss in a greater length the profitability of the banking sector, because how it impact the present situation, what sort of profits we have enjoyed in 2015 to 2019, and from 2020, so we had an issue about the profitability, and due to this COVID-19 as well as the other factors, and then we discuss how profitability can be look at it from the proposed budget 2021, how you can take advantages of the budget proposal to improve the bank's branch profitability. Right. And the next topic, we're going to discuss now little bit of, now we have learned the industry. We discuss about the total deposit in the banking industry, total loans portfolio about the banking industry. Then we discuss about the total NPL, the CASA requirement, and other factors, right? NIM and things like that. And now we are going to discuss. I took some example from some bank. Their annual reports, and see with industry where you are. Now, please remember, now first we look at this, the total market. Say for example, total deposits, for example, total deposits, entire total deposit, we say in the Sri Lankan market is 10 trillion, for an example. Your bank is, say, out of the 10 trillion, the total deposit market, your bank is having around 5 trillion. Example, right? So what is your percentage? What is your percentage? What your bank is contributing? What is your market share in that case? So my total is 10. Your bank is having 5 into 100. So what is your percentage? You're almost having around 20% the market share about the deposit. One bank. Right? Example I'm referring to, right? Now just look at it. This is your 20%. So for that 20%, what is your branch contribution? Now from that, you say your total bank deposit. What is your branch deposit? Say your total bank deposit is 5 trillion now. So you may contributed, for example, 100 billion. So 100 billion divided by 5,000 billion into 100. So that will give you your branch deposit base. So you as a branch person, you must need to know how much your branch contributing to your bank deposits, how much your branch contributing to your bank loans, how much your bank is contributing to your NPL and things like that, right? That is why you need to understand the bank level, and bank need to understand the industry level, right? For you to operate your branch in a very profitable way, right? One day, once you become a branch manager, so you need to understand all these things, right? To support that, now I'll explain to you. So if you really look at it, your industry and with your bank. Now you may working in a bank's BOC, you may working in the NSB, you may working with the people's commercial HNB. I'll just give you some food for thought, right? Now we look at it, whatever the bank you're working, now this information. Now these informations will give you with the total figure, right? In terms of deposits, this bank, when you are compared with other banks, right? Go through all these informations. Right now, say for an example, the total deposits example, NSB is having 2 is having with the BOC, 1.4 with the People's Bank, 713 from the Sampat, right? HNB, commercial bank, like that. You look at it, the deposits. So you look at it from the total, what is your position? And then take your branch into this formula and see what is your contribution. So I'll just give you, that is why we need to understand branch bank total figures and think about your branch, how much is contributing to your bank portfolio, right? So from each and every aspect, so you get an idea, right? I hope you need to understand that. Okay, so just look at it. Some of the figures I have quoted from again from E and Y. So just look at it. So CASA ratio. Now, what is a CASA average ratio? What is the CASA average ratio we discussed? Is around 32. It's going to go up. Now, first figure, the first quarter, what is the CASA ratio you were referring to? Is around 2020 first, around 32%. Right? Okay, now let's look at it. So this is the market rate. That is the market rate. Now let's look at it from the compared with 2020 and 2019. So you look at it from BOC, right? The first quarter, second quarter, suddenly you see Standard Chart is higher rates, right? So their rate is around almost 60%. So that means, so they earn more profits. So they are not much encouraging FDs. They are more concentrating on savings and current account. You look at it, the some banks, commercial bank in Sri Lanka. Compared with 2020, the first 6 months, but that figure is more in latter part of 2020. That's the entire 2020 we take into account. The CASA ratio is improved because one factor, as I explained to you, the gap between the savings and the deposits, FD rates are reduced, then CASA is going to go up, right? Okay. Right. Now you look at it, your bank, what is your percentage, right? Is averaging around 30%, right? There are some banks maybe less than that. Banks like NDB, when you're compared with the total figure is less than. Now, what is the average? Is 32. Average is 32 in the market. That's the industry rate, right? Average is 32. So your rates, you look at it, your bank rates, right? Almost most of them are far with 30s. 30, 31. But if your range like HNB, NSB, and then you look at it from HNB is okay, NDB and Ceylon is okay, and NTB is somewhat. So NDB, so you need to look at it. So how to improve your CASA, because you are averaging around 20%, but the market rate is the industry standard is around 32. So that means, so you need to collect more savings and FD. So right. Okay. So that's what we need to understand the industry, and we look at it from your branch, bank, and within the bank. So suppose your branch is giving more than 22% CASA, that means your branch is contributing a lot to your bank. Right now, say I took an example for NDB. So your bank ratio is around 20, right? This CASA ratio is 20. But your branch CASA, if you analyze how CASA is analyzed, take the entire total deposit base, right? And you look at it from that base rate, take the savings amount and the demand deposits amount, balances, and from that you work it out from the total. Then you get your CASA ratio. So then your CASA ratio, your branch may be 40, 50. So that means you are well above the bank rate. So, but bank are below the industry rate, right? Because it, as I explained to you earlier, the CASA is directly contributing to your what? It is directly contributing to your profitability. right? So that is why we need to look at the industry and your bank and your branch. Then look at the NIMs. So you look at the NIMs, of course, based on the net interest margin. So you look at it 2020. So that because of your small percentage, but it's net interest income mean basically your income level divided by interest cost, right? Net interest income and divided by net interest cost is the net NIM comes, right? So if you really look at the NIM, is certain banks is having a little higher NIM, right? But if you really look at it, as I explained to you, because of the 2020 due to this COVID, the NIM, net interest margin of almost all banks has come down compared with 2019. That is why I said 3.3% has come down, right? If you really look at it, the light green is 2019 first half. If you look at 2020, little darker blue has come down, except for PABC. We that's need to understand. Need to highlight how PABC the net interest margin has gone up. That's somebody if you want to study, you need to study. But almost all other banks, net interest margin has come down, right? So it's a case if you want, if a student you want to understand how with this all these factors with all other banks has come down the NIM, how Pan Asia Bank has NIM has gone up, what strategies they use. That is the intelligent guy who need to look at it. Okay, right. Now let's look at it. Profitability impacted by slower loan growth and six margin. Now I explained to you the central bank as the instrument. They use banks to not to charge high interest rate. They have given maximum interest charge to be done. So therefore the margin is come down. So one way is loan growth also low, because if you look at it from 2019 and 2020, right, only 2 billion increase, 7.9 to 7.2, right? Very low increase of loan growth, right? So if you want to improve your profitability, if you want to improve your loan portfolio, right? So one factor for contributing the profit is that. So you look at it, your branch, your return on equity and return on assets of, why is assets? Because your the assets contributed by loans. Remember that, right? Your assets, if you want to improve your asset base, what you need to do? You need to improve your loan portfolio. So how branch will support that? Give more loans, improve your bank's asset base by giving more loans, right? Suppose if you want to improve your asset base, you need to improve your loan portfolio. The moment you improve your loan portfolio, return on assets will go down, right? So you can compare this with your industry when you're compared with your other banks. Okay, right. Then again, another important factor, so you need to understand, and that is NPL. So NPLs to increase with changing economic condition, right? NPL to increase with changing economic conditions. Now, NPL, as we explained to you earlier, so there is a tendency if you people have some problems because this tourism business are not working, remittances are not working, and due to a lot of factors, there's an NPL percentage is going to little go up, right? And as a result of that, what is your bank when you're compared with the industry. Now, there's something as for gross NPL of banks in June 2020, you noted that there's Sampath also having little higher, uh, Sampath is having higher NPL, then next is HNB, then BOC, and so NSB is 2.3. Now, some people may think, oh, how NSB is 2.3 when you are compared with some other banks like uh, NDB, Sampath, commercial, all are having 7.5 range. How NSP managed to go for 2.3? So that means they are good in recovery, or they are giving quality loans, things like that. That is not the case because NSP cannot give commercial loans, right? So they are less risky than other banks. That is the one of the reason why NSP is having little less rate. But you can't compare. They are good, but apart from that, averagely you see in June 2020 figure, the NPL has gone up. So averagely around 5% to 7%. So it may be little more in end of December 2020. So then you need to understand, so what actions you have to take in the branch level as well as the branch level. Now, this information is good for you to understand. This is the branch level, and what is your branch level? Suppose your branch level is 2%, say for an example. Now, say for an example, we'll take Sampath. Now, what is the Sampath rate in 2020? At June is something around 7%. Suppose the branch in from your total portfolio, right? From loan, how much loan has given in, say, for an example, Matara branch, Sampath Matara, right? So first you need to look at it, how much of loan given by the Sampath in the entire bank, how much the branch Matara has given, and from that, what is the total branch NPL and what is the Matara branch NPL. So if you're maintaining 2%, 3% is very good when you're compared with your branch bank, right? So that is why these informations are important for you. Why we are need to look at the industry, and why we need to look at the branch bank, and why it is important to the branch, right? So you need to manage all these things, right? That is how you are be awarded as a best branch, right? Things like that. So I think a lot of banks is having competitions, best branch, in terms of deposits, in terms of loan, in terms of NPL recovery. There may be a criteria for you to judge the best brand. Best bank branch from the region, best branch of the national. There are some criteria that your individual different banks may apply. So one criteria definitely may be NPA because it really contributing to your operationals in the branch level, right? Because it's really contributing to the branch level profitability, right? So that's why it's important, right? That is why we need to understand the total picture, bank picture, branch picture, right? I think you understood what I'm explaining to you, right? Okay. Now, up to now, what we have discussed, right? So we have almost discussed last 2.5 hours. We have discussed banking industry analysis. Just before we moving to the next area, let me briefly summarize what we have learned up to now. Right? What we have learned up to now. First, so this session is basically we talk about some real real statistics which are important for branches as well as a bank professional. So we discuss about the banking industry analysis, right? So under that we discuss what is business environment. So banks, we need to carry out our business under high VUCA or VUCA environment. So we explain what do you mean by VUCA. We said first one is V, then we discuss about answer to U, and we discuss complexity, volatile. Then we discuss what you mean by a volatile environment. Then what do you mean by uncertainty environment? What do you mean by a complexity environment, complex environment, and what we discuss by ambiguity environment. So that is business environment. Banks has to go through. Then we discuss in a greater length again the global and uh, local bank market. Before that, we touch very uh, very briefly the what is the market, what is the economy in the world today, and what is the economy in Sri Lanka today. What is our total economy market and how it impact today because of this COVID-19, right? Okay, so then we moving to the bank market globally and the local. We discuss the global. We had around 30,000 or different type of banks in the world, and the total asset base in the world banks is approximately around 146 US dollars trillion, the total asset base, and that's a local that's the global environment. And then we discuss the local banking market environment. We discuss the past 4 years from 2015 to 2019, what happened, how the asset has grown, what is the percentage of asset base growing, and how the deposit is growing, and how the loan and portfolio percent has gone during the last couple of years. And then we move into the present position of 2020 up to the first half of the 2020. We discuss what really happened during the first 6 months, how it impact the bank businesses, right? So we will discuss very briefly on that, very lengthy certain areas. And then we discuss under the business banking industry analysis, key players in the market. And under that we discuss what are the key players in the global banking market. And we identify 4 highest banks in the world is representing in China, right? Over 4 trillion US dollars asset base. 4 banks out of 25 top ranked banks from China. And I explained to you maybe 5-6 years ago, the top 4 positions are occupied by the USA. So that may be the reason for these, the China USA issues, because the power is coming from Western to Asia, right? So we discuss in details on that. And then we discuss the local market positions. We discussed the key players. We had around 39 banks in Sri Lanka as of today, and yeah, around 29 banks, right, basically, and 29 banks of Sri Lanka. So how many of our foreign banks, how many of our private banks, and how many are state banks? And we discuss uh, certain role played by the financial institutions, like finance companies, is on 39, right? 29 is 39, and the issues faced by the finance companies, and some of the finance companies are closed, and then amalgamations and things like that. Why we need to know? Because these are somewhat competitions for us as bankers. And then we discuss how bank can be classified or categorized, right? In details, we discuss one method is asset base, medium, large, and small. How many are in the large category? How many are in the middle category? And how many are in the small category? So majority of banks are asset base of less than 200 billion. It's around 13 banks having out of 23 banks is less than 100 billion, 200 billion category. Right. So then we discuss the next method of classifying the banks according to the central bank. Domestically, significantly, systematically important domestic banks and non-banks. So how you categorize them, and systematically important bank, why they are important, how they categorize further into three buckets. In Sri Lanka, we don't have a third bucket number three, but we have only bucket two and bucket one. Bucket two is basically we call Bank of Ceylon and Commercial Bank. Bucket one, HNB and People's Bank. All other banks are categorized under non-important banks, but that doesn't mean they are not important. They are not systematically important, right? Okay. So then, having understood the bank classification, then we move into the profitability. What factors contributing to the bank profitability? That's important things, whether you are state bank or the private bank. So bottom line play an important role. So what impact the profitability of the banks? So what factors we need to look at in the profitability? Under that, we discuss the NIM, net interest margin, the low regime, in low interest rate regime, and things like that. And specific assumption we have given for CASA. Why it is important for branch to maintain the CASA percentage, how it is contributing to the bank, and how it ultimately contributing to the profitability. And further we discuss the present proposed budget 2021. How can you impact the bank's profits? So we discuss something in details. And having understood the industry, so therefore we discuss your bank, why it is important to compare with the industry standards. Right? We have given certain information, actual information. I have quoted from certain analytics reports and central banks, their bank individual annual report figures, publications for papers based on that. So we discuss certain certain banks in Sri Lanka, how they perform the first 6 months against the industry. Right. Now, with this backdrop, We move into the next topic, and that is basically we call them as financial crisis and the importance of trust and confidence. Now, the trust play an important role in a banking business because the banks are survival in the market because of the trust, right? Now let's look at it. Uh, it's finance businesses critically depend on customer trust and confidence. Now, damaging this customer confidence will lead to a failure of business organization. The moment one organization fail, it has the knock-on effect the other. So that is how what you call uh, the, the systematic risk, right? So signaling we call as Patiria Miyabatan, contingent, right? Risk. So if something happened to one bank, it have repercussions on the other bank, right? So when you go back to in 2007 and 2008 period in the world, so there may be a lot of banks collapse. And mind you, this is when you're compared to today's pandemic situation about this COVID-19, this impact is, this impact is very less, but this was happened because due to the loss of trust and confidence about the customers towards the banks. Now, one of the big, but Sri Lanka is not much impacted on this, right? This financial crisis, we call them as. That is purely based on the loss of trust and confidence, general public towards the banking sector. Now, in you see some of the Northern Rock Bank in UK, you see you noted that the asset base of the bank, the economy of the bank itself is having sterling pound 113 billion, the bank asset base. Now, you see, if you look at the Sri Lankan economy, the Sri Lankan economy is totally around 90 billion market. So you see the bank is having more than the Sri Lankan economy. So this bank collapse. So 150-year-old Wall Street investment banks, we call them as a Lehman Brothers collapse. You see the US dollar 690 billion asset base. Bank of America collapse. Likewise, there are a lot of banks collapse due to the loss of trust and confidence. The financial crisis can take place. Therefore, the moment you lost the trust and confidence of the banking system. So how it happened? Now you see, we call them as if the customers are physically moving to the particular bank and ask the money, we call them as Depositor Run. It's a technical word, right? What do you mean by a Depositor Run? In the distress situation is contagious, leading customers run to a bank physically and try to withdraw the money from the bank. So Sri Lanka also, we had some situation when the Selinco groups, these gold and key issue, and then it after effect that the Ceylon, but then ultimately government interfere and the central bank interfere and rescue that. But you noted that finance companies, a lot of people go and asking for money, so that's a depositor run. And also another run can be taken place, what you call the electronic run. At the same situation, before you moving to the branch physically, what customers try to do, try to withdraw the money through electronic forms. And that is what you call electronic run. So we can see the three runs: depositor run, electronic run. What is the third run? The third run is the bank run. What do you mean by a bank run? Bank run is, now since they have some problem if the customers go and collect them, try to withdraw the money, so no bank can give the entire money or entire deposit of the customers. So they have invested this money in some other places. So what happened? The bank may close their businesses for customers, maybe open for couple of days, limiting the withdrawal maximum any customer can withdraw, say 100,000 rupees per month, like that. So these are we call bank run, right? If the customers try to withdraw money at once, bank cannot do. So therefore, bank may close the businesses. So there are three types of runs. One is electronic run, depositor run, bank. All these three runs happen due to what? Due to the fact that the loss of trust and confidence. And it was estimated because of 2008 and 2007 financial crisis, the entire lost estimated approximately US dollars 22 trillion. 2008 financial crisis cost approximately US dollars 22 trillion. But what may be the present COVID-19 cost? Is more or less, right? It is definitely more than this. But that is the pandemic. That is why you call pandemic. Pandemic is basically, it is rapidly spread throughout the world. But financial crisis, in that sense, it is not impacted every country in the world, but it may be impacted to certain part of the world, but the side effect, so as results of that, other countries impacted, but not to this level of magnitude faced by the present COVID-19. But this is due to trust and confidence, but that is something different. Okay, right. Now you see the financial crisis. We had some financial crisis before that also. In early time, we had some financial crisis, and then we had some Asian crisis, right? That is in 1997, where Indonesia, Malaysia, Singapore, and Philippines are Thailand so badly impacted. But this is more on the western side, more developed countries. This financial crisis in 2008, right? So we need to understand, if you do businesses with customers, what customers are expecting, trust and confidence. So you as branch, as the ambassador of the bank, must behave or work or do something to build up trust and confidence. So the branch, if the customer lost the trust and confidence of the branch, it has a knock-on effect for your entire bank. Remember that also. That is why It's important for customer trust and confidence. May lead for a financial crisis which took place in 2008. Now I think you understood the what do you mean by a financial crisis, trust and confidence. So there may be a financial crisis can be take place because of this COVID-19. The financial crisis took place because of economic crisis, right? So in Sri Lanka also we had some issues. It's payment of the loans we have taken. So our foreign reserve percentage is at the moment is around 5.68 US dollars, which may be not enough to pay our debts. Sri Lanka has categorized good paymaster or good settled person in the banking. So we may need to go for a moratorium, like we offer moratorium to customers. So as a country, we may ask from our donor countries as well as the international bodies like IMF and World Bank forgive us as a country for moratorium. I think the president has also requested through the World Bank, through the World Health Organization for those IMF as well as the World Bank and some other lending institutions, the world is established lending institution to grant or give a debt moratorium. Now we banks give debt moratorium to our customers. Likewise, the country is asking debt moratorium from those institutions like IMF and World Bank, right? So we also having some problem with paying, so we delay in payment. So we expecting our economy to come into the normal and come up with some risk adjustment or structural programs. So we also request you. So if not, there may be a financial crisis, not because of trust and confidence, can take place because of economic issues, right? So remember that. So but I am referring here for the bank trust and confidence, right? Okay, so we move into suddenly we move into a little bit of having understood the importance of client confidence level, trust and confidence, right? Now, how can you improve them? How can, as a banks, as a branch, how can you improve the client's confidence level? How a branch or bank manage the client's confidence level and also the ethics. So ethics we are going to discuss next week in details what you mean by ethics and things like that. But it is the most challenging, it's a most difficult piece of business development puzzles in business is today's the trust and confidence. Actually, it's a relationship, business relationship builder based on trust and confidence. Because the trust questions arise more often with the scale of a service because than a product, because service shows some specific characteristics, show some specific characteristics. Now let's look at it. What are the financial present status of the financial customer protection? Right, so we are going to discuss in more details all these things. Consumer Affairs Authority Act. Now sometimes a lot of customers are not aware, even banks are not aware. Consumer Affairs Authority Act also can be considered 9 of 2023 and its amendments can be protect finance customers as well. Remember that lot of people thinking consumer affairs authorities are there to for purchase of sugar and things like that, not rice and not that. The Consumer Affairs Authority Act also protect financial customers. Remember that, but we not pay much attention because there are some other laws uh, there to protect the financial customer. Second, financial ombudsman. Third one, we have Sri Lankan Bank Associations, and they establish what you call the Upadeshan or the counseling center. Then, as our regulator, Central Bank has introduced the customer charter in 2012. And we have deposit insurance and liquidation system scheme. So there are a lot of financial customer protection initiatives has taken. So we will going to discuss all these things in little later. Right now we'll discuss why. What there are several issues that make financial services are different. So banks are a little different. We are not selling goods and so what are the different? What are the issues as banks we need to face? One, in most industries, most businesses, now items are sold for money. So if you want to buy some sugar or whatever, so you need to pay money and take the goods. But in financial services, mind you, we are offering money and related items. We are selling money, right? So that's another important aspect. Why there are some issues make financial services little difficult because we are selling money, others are selling goods for money. Second reason, comparatively to the other businesses, right? The regulations are more intense in financial services than other businesses. So we have a gamut of rules and regulation supervised by the central banks, rules and regulations, all things are there. So because one fact is the money is very sensitive. So second point is higher regulations. And third point, as all we are aware, so we are selling intangible things, not tangible. Right? You cannot feel appealing to your five senses. We are selling intangible things. That is why we have a little problem selling banking products, especially in the branches. Another important point is customers are sit on the both sides of the value chain. Usually, other businesses, customer sit on a one side of the value chain, either buyer or the seller. But as far as the banks are concerned, the customers are often sit on the both sides of the value chain. As a depositor, as a borrower, right? Creditor and the debtor, both sides is sitting. That is another important thing. And the last point, now today, the distribution is complex. The banking distribution is very complex and also highly regulated as well as changing. We have a different methods of offering services to customers. So as due to these factors, so these are the issues faced by financial services providers as bankers when you're providing, selling and other tangible products. Clear? Right. So why these key issues driving this? What are the issues? Why key issues driving this? What are the things will drive these points? One factor. Financial products are just too technical. Sorry. Too technical for the client to grasp properly. So complicated. People not aware about what is AER, what is floating rate, what is annual effective rate. So they're not bothered. They're difficult to understand. Sorry. Right? So difficult to understand. Right? So very difficult to understand. But banks, what we tell customer believe. That is why we need trust and confidence. And also sometimes the contracts are often one-sided in favor. Usually it's a bank favor. So when customer comes to take a loan, so we go for agreement or loan document. We request customer to sign certain statements. Customer most of them are not going through and they just sign. We don't know what we have put it, they sign. Why? Why they sign? Because trust and confidence. So therefore, most of the contracts are usually one-sided in favor, that is our side. And information also may be asymmetric. Some information sometimes those are not good for banks. We may not disclose. You're supposed to disclose, but there may be a asymmetry. So if the information are given, sometimes not enough to or not understand more these informations based on in technical jargons where the layman cannot understand, and sometimes maybe also inadequate. And comparisons of through price are extremely difficult. You can compare the prices now. Say for an example, just give you an example. You put two advertisements for 5-year deposits, for example. Some people say we give you a 30% annual rate paid at maturity for your fixed deposit at the rate of 30%. Example, there are two paper advertisements, one in close by another one. One bank say, we give you a 30% interest rate annually paid at maturity for your FD. Or someone can say, you can double your interest. You put 100,000, 5 years, I'll give you a 500,000 or 200,000. Some people can say, double your in 5 years. Then some another advertisement they say, we pay your 5-year fixed deposit, annual effective rate of say 18%. 18%. For layman, we look at it, the one bank is giving 30%. One bank is giving annual effective rate, they put it slowly, 18%. Now, the layman go to which bank? The bank who give 30%. But actually, he's not getting the 30%, but he's getting less than 18%. So therefore, comparisons of through price are extremely difficult. So these are the issues faced by their customers. So therefore, it is important for regulator as well as the bank to build the trust and confidence. We are not going to banks is not going to cheat the customer. Then only your bank get more reputations or trust and confidence bank while disclosing everything, good and the bads. But once this customer come to the bank branch, what we try to do, we want to improve the business. We may not give all these disclose. We may not disclose everything. So that is why the importance of trust and confidence, not only the bank level, but also the branch level. Right? Now, you as bank, what sort of, lot of banks now have taken a lot of initiatives to improve the customer confidence level. Some are basically imposed by the regulator. First point, the balance confirmation. Now, a lot of banks are now introducing, they may have a lot of apps as well as missed call concept. Give you missed call, then I'll got a SMS message. I'm telling that, so this is your balances, your account or your credit card. So you build up the confidence. I'm assured that nobody has taken my money. Nobody has misused my credit card. One point, balance confirmation. How can you create trust about your bank? Second, SMS confirmation. Now, the moment you do a transaction from using your credit card, you immediately get some SMS. So you have done a transaction, or you may have withdrawn some money from this bank like that. Or you credit your interest from your FD renewal. So you get SMS confirmation. But lot of banks apps are available today, developed by the banks for you to build up the trust and confidence. And mind you, when you're dealing with money, it's very secret and very sentimental. Right? Remember that. Right. Next one. Rating given by the agencies. Now, central bank, as our regulator, was requested all banks need to get a rating agencies, a rating from an agency, AAA, double B, double A plus, and things like that. It's give you how good your bank in terms of many aspects. So when you advertise any advertisement in the newspaper, so you need to show your rating. Not only that, you need to show your branch also. We will discuss customer charter later on that. And to what extent you handle your customer complaints promptly. That builds up the trust and confidence. Provide multi-delivery channels to the customers. Now, that's very important during this corona time. Somebody want to go to the counter, yes, still can, and use many alternative digital delivery channels. And provide a competent staff. That's important. Competent staff who give some good advices to a customer. And easy access to your bank if need some urgent recount. So these are some of the creative things your bank has already established to provide a better customer. Let's look at it now. Let's look at it now. Ways to increase customer confidence by the central bank. Right? Let's look at it now before you go for today's in the session. What actions taken by the central bank as our regulator to improve the customer confidence level? So central bank has initiated many. One factor is strengthen the customer bank relationship. And in 2011, the central bank has introduced customer charter. Direction number 8 of 2011, central bank introduced customer charter. One important factor is to improve the customer's confidence level. So, what is the objective of customer charter? I think most of you are aware. One, safeguarding the interest of the customer. Second, building up a healthy relationship with the customers and the bank. Improving the confidence level. And also ensure stability in the banking sector. Because why? If a customer lost the trust and confidence, we have seen what happened. Depositor Run and the electronic run. So customer go to the banks and ask the money. So bank stability not be there if it's happened. So why central bank introducing the customer charter? To fulfill certain objectives, specifically to protect the customer, safeguard the interest of the customer. Why? Let's look at it. Key areas covered by this customer charter. I think most of you are well aware about the customer charter. Because you're supposed to be aware about the customer charter, because mind you, when you got an appointment from the bank, so you need to sign two documents. One document is maintaining the secrecy or confidentiality. Right? That's important. Banking Act, Section 78 talk about confidentiality. 77, Section 77. You sign. You are not going to disclose any information to the third party. The moment you disclose some information, the bank can take action against you. Right? Secrecy. Banking Act, Section 77. A very famous law. The moment you took your appointment letter from the bank, so you have to sign. In after 2012, so there's another document introduced by the bank for employees, that is customer charter. Code of conduct. I am doing my job according to the code of conduct established by the bank. So the bank employees who joined 2012 after 2012, they have to get a letter, I mean confirming that to this personal file. But the new employees who is going to hire the bank may have that clause as well. So there are two documents you need to sign. One is the customer charter, other one is the secrecy. Okay, so let's look at it very, very briefly. In a nutshell, what are the key areas are covered in this customer charter? What are the key areas covered in the customer charter? One key area is informations and understanding about the products. You know, in a bank, we have a lot of product and services are offering to the customer. We have a lot of credit products. We have a lot of savings products, because it is a duty of a bank to provide all this information to the customers. That's the area. We will discuss little details on that. Then, what are the terms and conditions of this product? Second area. Terms and conditions. Kondesi. Right? Third one, compensation. What are, if you're going to stop, so what are the compensations we are going to offer to the customers? Fourth one, protection from bank agents. So you know that sometimes the banks appointed certain agents. So what are the rules? How the agents need to be behaved? So we will explain on the customer chart. Then complaint measure and relief. If customer complained, what is the methodology you are going to use? 6 point, special attention and care for needy customers like senior citizen, disabled people, like that. That is what we have a ramping facilities and things like that. And those are 6 from the what employees need to do towards customers. But there is another area, and this customer charter talk about the customer obligations towards the banks. What are the customers' obligations towards the bank? So therefore, the customer charter talks about the duties and responsibilities of employees as well as the customers. So these are the key areas, 7 key areas covered under customer charter. Right? Okay, that's important for branch. Now, what are the minimum information in a KFD? Now, what do you mean by a KFD? Mean key fact document. So you see, your KFD sometimes you may have a leaflets or some document about the product. Now, mind you, but in the leaflet, we are not usually give all the information, all the descriptions of the product. But suppose if your leaflet is not carry all the information, if the customer comes to your bank branch and asks for more details, you need to give him a required full information which are not covered on your leaflet. That is the right of the customer. What are the financial benefits and other benefits you're offering to the customer? What are the charges, commissions, or interest you're offering to the customer? What are the procedures you need to be followed to obtain such a service? What are the major terms and conditions? So these are what you call KFT. KFT means key fact document. If a customer comes, and also remember, not only that, and you must give all these information as his preferred language. So that means suppose the customer comes and asks from you, I need a singular. You need to give. I need a Tamil. I need to give. I need the English. You need to give. Now that is you. I will just quote something recently. Now these, these minister go and give certain evidence to these Easter Sunday Commission, and he said, "I want to give my explanation in my own language in 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 Tamil, right? Because he's right. Because we have three languages: one English, Tamil, Single, right? So we need to. But if they ask some other language, we don't want to give, but we need to provide the customer's preferred language, right? So those are covered under key fact documents. All the information where it may not covered in the leaflet, if the customer need, you must give. That is why we have all these things available in the branch, but people are not much educated. So they want us things like that, but you are supposed to give all this information, right? So that is what you call key fact document. So then another important thing in the branch level, so there are some mandatory displays in banks. So you need to show certain information to customers. One is current interest rates in all products. So you need to show. That is why today we have some electronic display materials like TV forms. It is there, it's rotating the interest rate. Otherwise, you have to put all this interest rate in, in physical forms. It's very difficult. It's cover the entire branch. But a lot of banks are now using electronic equipments to display your interest rates. Not only that, you need to show the buying and selling rates of Forex. Certain standard exchange currencies. Then you need to show a credit rating of the bank. I told you you have to display. Not only that, you want to show the bank license to show to the customer. Not only that, and you need to show the contact details of the financial ombudsman at the credit counseling center, and bank hours and holiday notices, opening hours, things like that. So these are some of the mandatory displays in banks and in branches. specifically you need to show. When the central bank supervision team comes to visit your branch, and they may look at it whether your branch has display all these things, and they can take actions against you. Remember, if the branch is not adhered to these customer charter, central bank as a regulator can cancel your license to do banking business. That law is such powerful, right? If you are not adhered to the customer charter, all these things, they can cancel your license. So that customer charter is so powerful, right? Okay, so these are some mandatory displays in banks. Now today, as I explained to you, a lot of things are shown in the electronic devices, right? Okay, these are some mandatory displays. So there are some things you need to show under terms and conditions to customer, as explained to you, charges, interest rates, what are the resolution procedure if a customer need to complain about something, what is the methodology established in the branch, right? Any compensation proposed by paid the relevant customers. Say for an example, premature withdrawal or terminations of participation in a product by the customer. So if the say for an example, you deposit the money for 1 year, but you're going to withdraw the money within 1 week. What's the interest rate? If you're going to withdraw the money after 4 months, what is the interest rate you are going to offer, like that, right? The compensation has to be explained and also to be informed to the customer. So any restrictions on opening of accounts. So maintain minimum balances of money. If you withdraw the money, and if you're using the electronic form to withdraw the money, you are charged so much. If you go to the counter and withdraw the money, so all things has to be displayed to the customer, need to be explained to the customer, and need to be communicated to the customer, right? That is why sometimes you see, if you go to the counter, so you will charge 20 rupees per transaction without using the electronic machine, like that. And also remember, it is a duty of a customer, if any suspicious transaction, so you need to report to the financial intelligence unit. These are the important things, right? So all things are covered under different rules and regulations. Now, say for an example, now central banks was also requested under customer charter from the bank. Suppose you open an account. Now, say for an example, you open an account for with the customer, so pay interest of say 15% for an example. So you are going to continue with this specific product with the customer. So you want to close that account. So in that sense, so you need to give prior notice to the customer, and some compensations you need to pay to your customer if he's agreed to do so, right? So those are explained under customer charter. You can't just withdraw, you can't just ignore, cancel the product what you have introduced without getting the concern and will give to you the prior notice, right? Okay, now you see there are some people, some banks are using agents to do some bank businesses. So these agents may behave in a following way. Cannot harass the customer using abuse debt collection practices, disclosing customer information to others, giving false or misleading information to do the business, signing any documents outside the bank premises. Those are not legal. Now, reason what happened in the finance businesses, leasing, one agent has gone and hammered one customer. So those are not comes under banking. Those are unregistered finance companies. Remember. But the banks cannot do things like that because banks need to take the responsibility of that if their agents are behaving like that. Because under customer charter, you have to be enter into agreement with when you're getting the services from the agent. So these agents need to be follow all these procedures. So thereby protecting the customer. So the agent cannot be used abuse word, cannot harass, right? Can be a give a false information, right? Cannot be unduly influence the customers to buy the product and things like that. So those are protection from agents of banks. And you must have a complaint measures policy established. If you have a complaint, how to make a complaint? What actions your bank is going to take based on that complaint, right? So there are a lot of activities have taken place in the banks under customer charter to protect customers, as well as there may be a special attention to and care should be done for elderly people, disabled customers. That is why we have all these access, easy access to the branch. Customers with low financial literacy have right to receive special attention to facilitate them, to have a fair access to banking, ramping facility, right, for your wheelchairs to go up. Now, when you go for to get a visa from USA Embassy, right? So the US embassy there who are giving the visa, they'll ask if you have some problem with English. They ask from you whether you need the translation. So there's a single speaking guy is there. He will tell us about what the visa officer asking and ask from the recipient and converted and tell him again. So these are the rights of the visa requesting person. Likewise, so there may be a special attention and care need to be given to those people. So you see now how important the customer charter to protect the customers, right? So branch employees or the branch staff need to be adhere to all these code of conduct and the customer charter, right? So how many of you are aware about these charter procedures? How many of you all are aware about this? Fortunate enough, the general public is not much aware about these chart. Otherwise, so you cannot get rid of that, right? Because why all these customer charter are established? To build trust and confidence. Apart from that, you see, there are some customer obligation towards the banks. Up to now, we discussed the, the responsibilities of employees, bank branch employees' responsibilities towards the customer. Now, there are some obligations also identified from the customer's point. So, what are these things? One, it is a duty of customer to exercise due care in all transaction, right? It is to exercise due care in all transaction. So there are very famous laws in how to write the check, how to write the, the deposit slips and things like that. To exercise due care in all transaction, customer need to take care, right? Then second, should not borrow beyond their repayment capacity. So in Sri Lanka today, so now these days you noted that customers are taking loans and loans for various purposes because of the low interest rate regime, 7-8%. Customers are taking enough and enough loans because of the low interest. It's good, but if you're using for that purposes, most of the time what happens, the customers are borrow beyond their repayment capacity. So that is why these NPL is going down. Because of the low regime interest rate, they may buy for various purposes, maybe for personal consumptions and things like that. So it is a duty of customers not to borrow beyond their repayment capacity. That's the second obligation. Third, pay the loans and create healthy relationship with banks. So that means once you take the loans, it is a duty of customers to pay their installments and any commissions, due dates. And also compliance with the agreed terms and conditions. And also, suppose he may have some problem with repayments. So he has some distress, financial distress. It is a duty of customers to inform the bank. Now, so you see under moratorium also, this what central banks given directions to customers. So if you want to go for moratorium, or if you want to go for specific loans, so you need to request from the customer, request from the bank, inform the bank about the financial distress, right? That is under customer charter. It is because banks not going to see whether you have a problem. So it is your duty to inform the bank, I have financial distress. Please consider solution for me. And it is a duty of the customer to give addresses, contact details if you are going to change your residence. It is your duty to inform the customer, a bank. Suppose any fraudulent transaction is done from your account or from your using your credit card or using your savings account. So it is a duty of you to inform the customer to the bank. But banks also take some initiatives, because the moment if a credit card used by another country, overseas country, so it is bank is usually asking from the person concerned in Sri Lanka or from the customer itself whether you have done a transaction in overseas. So that is the bank side. So bank will look after you. But it is apart from that. So it is your duty to inform any fraudulent transaction done to your account. So there's a very famous case, Greenwood case, right? Okay. So shall not take any operational lapses of a bank as an exception for the fulfillment of the obligation. Suppose there's something there you have identified some operational lapses from the bank, so that you not may use to fulfillment your obligation, right? So you noted that there are some obligations customer need to perform towards the bank. So therefore the customer charter, look at it from the both side, one from the bank as well as from the customer's point of view. Employee, customer. So why the main objective of customer charter? To build up trust and confidence of the banking system, and also the stability of the banking system, and also to protect the safeguard the interest of the customer. Right? Each and every employee must know what is code of conduct. We call them as a customer charter. That is why you need to sign once you get the appointment letter. You see the importance of the customer charter. Right? So there are some other areas also we need to study to building up the customer trust and confidence. That is ombudsman, deposit insurance schemes are the three main areas, and the ethics and the branchless. We need branch anymore to do all these things. Right? So we may going to discuss all these things maybe during the next Saturday. So if students who have not joined today, please tell your colleagues to join next Saturday. The last Saturday, I will going to do the last lecture, and otherwise tell your people to go through the recorded version before you move into the next Saturday. And thank you for with me from it's not 1:30, it's maybe around 1:15. So we're okay for 1:30. So we will be with you almost 4 hours, and we will discuss the main areas today, and the balance, the part we are going to discuss next week, and hope you understood today's lecture for your branch banking operation activities. Right? Okay, see you, and see you on next Saturday at 1:30 p.m. and we'll discuss the balance part, and I will send you a new tune on next Saturday as well. Thank you very much.